Welcome to this essential guide on mortgage pre-approval versus pre-qualification. When you're ready to buy a home, understanding these two terms can make a significant difference in your home buying journey. Many first-time buyers confuse these terms, but they are quite different. One gives you a rough estimate, while the other provides you with real negotiating power. Today, you'll learn exactly what sets them apart and why getting pre-approved can give you a competitive edge in the real estate market. Let's start with pre-qualification. Think of this as a preliminary conversation with a lender. Pre-qualification is an informal estimate of how much you might be able to borrow. It's based entirely on information you provide to the lender, like your income, assets, and debts. The process is quick and straightforward. The lender doesn't verify any of the information you provide, and no credit check is performed. Because it's self-reported and unverified, pre-qualification carries less weight with sellers. It simply gives you a ballpark figure to start your home search. Pre-approval is a much more thorough process. This is where you receive a conditional commitment from a lender to loan you a specific amount of money. The lender performs a full credit check and requires you to submit documentation proving your income, employment, assets, and debts. Everything is verified by the lender. Once approved, you receive a pre-approval letter stating the exact amount you're qualified to borrow. This letter is typically valid for 60 to 90 days. Pre-approval shows sellers that you're financially capable and serious about purchasing a home. Now let's compare the key differences side by side. Pre-qualification requires minimal documentation, while pre-approval requires extensive paperwork including pay stubs, tax returns, and bank statements. Pre-qualification doesn't involve a credit check, but pre-approval does pull your credit report. The information in pre-qualification is self-reported and taken at face value, whereas pre-approval information is verified by the lender. Finally, pre-qualification is not binding on the lender, while pre-approval represents a conditional commitment, meaning the lender intends to provide the loan if nothing changes in your financial situation. Pre-approval matters for several important reasons. First, it shows sellers that you're a serious buyer with verified financial backing, not just someone casually looking. Second, it strengthens your negotiating position significantly. When sellers receive multiple offers, they'll favor buyers with pre-approval because the financing is more likely to go through. Third, having pre-approval speeds up the closing process since much of the financial verification is already complete. And fourth, in competitive or hot real estate markets, pre-approval gives you a crucial edge over other buyers who only have pre-qualification or no financing documentation at all. Here's the bottom line on negotiating power. Pre-approval transforms you from a potential buyer into a credible purchaser with real financial backing. Sellers gain confidence knowing that your financing is less likely to fall through, which reduces their risk and stress. When multiple buyers compete for the same property, sellers will almost always choose the pre-approved buyer over someone with just pre-qualification. Your offer becomes stronger, and you may even have room to negotiate better terms or a lower price. Getting pre-approved before house hunting is one of the smartest moves you can make in your home buying journey.
If you like this video, hit that like button and don't forget to subscribe. Visit CodeLucky.com for more such useful content.